Good day everyone, thank you for watching this video. My name is Matt, and in this presentation I'm going to be covering our latest report on Honeywell International. Our latest report covers the third quarter results for 2021. The results missed expectations on the top and bottom line. Management lowered their revenue guidance but maintained EPS guidance, so from that perspective it was not a great quarter. What is our view on Honeywell? Well, we think that double-digit growth is unlikely and the premium valuations are difficult to justify. The return profile is also negatively skewed, meaning that upside is limited. We've got flat returns in our bull case scenario and bleak returns in our bear case. So in other words, our best outcome for Honeywell is to stay flat. Given its price, we think that there've got to be more attractive options. So let's have a look at the results. We've got revenues that were up 9% to $8.5 billion. Of that, product sales were up 6%, services sales were up 17%. Safety and productivity solutions were up 18%. This is the best performing segment. They sell PPE and also products and services related to warehouse automation. It also makes the smallest contribution to operating profit, about 14%. Operating profit was up 15% and net income and earnings were up 66% and 68% respectively. Now these sound like good numbers, but just bear in mind that they are off a low base. Just looking at performance. It has underperformed the benchmark over the last 5 years, and on a year-to-date basis, it's underperformed by 17%. On a year-to-date basis, Honeywell is up 6%, and the benchmark is up 23%. So moving on to the assessment, the largest segment is the aero segment, and that's the needle mover. As you can see in this chart, most of the growth is going to come from the next year, and that's growth off a low base. The other segments, which are growing a bit faster, have relatively small contributions to operating profit. If you look at growth before the pandemic, it was flat, either flat or very negative. So from 2013 to 2018, the year-on-year growth rates have been between -4% and 4%. In 2019 and 2020, they were down -12% and -11%. And of course, at that stage, it didn't trade at such high multiples. It's now trading at a 25% premium to historic multiples. And even once we get into a full recovery, we can't envision growth rates to be better than they were before. So it's very difficult to justify the current multiples. If you think about the segments in aerospace, there's a lot of uncertainty. The building technologies, a lot more people are working from home. Even with going back to the office, the global demand for building new buildings is certainly lower than before. The performance materials and technologies segment is probably the best out of the four if you take our team's view on oil into account. And then safety and productivity solutions, PPE growth is behind us, and we've already seen a boom in warehousing. And it's also a very small segment. So with that in mind, let's look at some scenarios for different valuations. We value Honeywell by applying an EV/EBIT multiple to each segment's historical peer average, and we conservatively value the aero and HBT segments at the overall historic average of 16.1 times. This is our base case, the blue line. The red line, which is our bear case, we assume that each segment trades in line with its historical average multiples. Since this bear case uses historical averages, it shows the degree to which we think Honeywell is overvalued. And then lastly, the bull case, which is the green line, we assume that each segment's multiple is equal to the multiple that Honeywell trades at. So that's at a 21% premium to its historic average on this multiple. And in this scenario, taking in consensus forecasts into account, the best upside is flat. So this is what I mean when I said the return profile is negatively skewed. You've got a lot more downside risk than upside potential. And so with that, our intrinsic value on Honeywell is about $178, which implies a downside of about 20% from these levels. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk. Additionally, the reports on Honeywell can be found on MyBase. Thank you very much for watching this video. Please will you take note of the following disclaimer before we end off. Thank you very much.